welcome to this monthly update. I'm Julia Lee, an equity strategist with Bell Direct, and it was another good month for the Aussie share market. In fact, that makes it 7 in a row where we've seen a positive performance, and that's the best streak that we've seen for the Aussie share market in terms of monthly performance since 2009. The good news is that every single sector traded higher, but the best performing sector was the consumer staples space with a gain of more than 8%. The worst performing sectors were the miners. Both the materials and the energy sectors underperformed. In terms of size, we saw the small and the mid-cap index outperforming the market, in fact almost doubling the gain of the benchmark ASX 200 index, up 4.9% versus a market return of 2.5% for the month. The Aussie share market also compared well to international markets. The MSCI index was up by 1.3% for the month. The German DAX was actually down 0.3%, while the French CAC was down 2% for the month. But outperforming, we did see Japan up by 1.9%, the US up by 2.1%, and of course Australia up by 2.5%. One of the factors that has been impacting on the market has been interest rates, and having a look at interest rates versus high-yielding stocks. And in Australia, we've seen relative outperformance of high-yielding stocks as interest rates have been falling. But regardless of the environment, be aware of dividend traps because dividends aren't guaranteed. And of course, as the share price falls, often the yield rises. Hunting just for dividends can lead to an investor exposure to troubled sectors in industries as well as stocks. So instead, look for sustainable dividends, which means incorporating stable cash flows and improving earnings into filters. But while we are with interest rates and markets, there's been a lot of talk that ultra-low interest rates are helping to support the share market. And that's actually not traditionally been the case here in Australia. I've gone back and I've crunched the numbers from 1990. And actually when interest rates were rising, we saw the Australian share market rising by 19% on average. When interest rates were steady, the Aussie share market gained around about 6% on average. And when interest rates were falling, the Aussie share market gained 8% on average. But of course, markets are forward looking. So adjusting that market performance for 6 months before interest rates started to move, and in which case the share market was up by 35% in rising interest rate environments, in steady environments up by 2.4%, and when interest rates were falling, down by 2.1%. It does seem a little bit different this time, and I guess the difference is that we are seeing synchronized falling interest rates around the globe. And given that Australia is seen as a high yield destination, a lot of our outlook for the share market based on interest rates is dependent on what happens around the globe, especially US interest rates. Moving on to reporting season, Christmas for analysts is coming up in the month of August, and it is important because it gives us an insight into the outlook of companies. And generally, companies that outperform during reporting season not only continue to outperform in the weeks after they've reported, but also months after they've reported. Having a look at the top 10 from last half-year reporting season in February. And since February, we've seen 9 out of the 10 increasing share prices, the average return for that group being 39%. Compare that to the bottom 10, where 7 out of 10 have decreased, the average return being a negative 7.6% from the end of February up till now. And I guess the point of this is that trends usually continue, and it is much easier to pick winners from the winners pile rather than the losers pile. And in this case, we saw 9 out of 10 of the winners continue to win, while 7 out of the 10 losers continue to lose. Looking at the big shorts and entering into reporting season, the biggest shorts are usually a good indication of what the market expects to underperform. Last February, the top 5 shorts were Galaxy, Sierra, JB Hi-Fi, Inghams, as well as Orocobre. And those stocks saw an average 10% decline from the beginning of reporting season, February to July. In fact, Galaxy and Sierra were down 32% during that period. So having a look at the biggest shorts at the last ASIC report on the 19th of July, and the 5 biggest shorts in the market in the lead up to reporting season are number 1, Inghams, Nufarm, Bellamy's, Galaxy, Orocobre, Sierra, as well as JB Hi-Fi. In fact, if you notice, there's two bars there. One are the short positions of those companies in February and one the short positions in July. And you can see that the short positions have significantly increased in Nufarm and Bellamy's since February. So we're coming up to some pretty big important milestones for the market. Number one, we'll be watching interest rates from central banks across the globe. Not only is the Australian Reserve Bank of Australia cutting interest rates, but we've seen cuts from Indonesia, South Korea, India. We'll probably see cuts from the European Central Bank as well as the US Federal Reserve, and that's going to be a key driver of our markets, especially the Aussie share market, which is seen as high yielding. Secondly, we are coming up to Christmas for analysts, and that's reporting season, and it is significant, especially because it gives us insight into the outlook of these companies over the next year. After 11 incredible years at Bell Direct, I'll be leaving to start my own new adventure. I'd like to thank the team at Bell Direct. It has been such a privilege to work with a team that's not only so passionate about the markets and its clients, but also so innovative as well. I will miss the team here. Secondly, for all those clients who have dropped me a line or said hello, I've loved having conversations around stocks as well as the share market, and I will miss that interaction. I hope you'll wish me all the best in my new adventure. I wish you all the best when it comes to investing in the market. So signing off one last time, I'm Julia Lee from Bell Direct. All the best in your investment future.